Welcome, capital raisers. I got Craig Stevens on the show today to talk about syndications, capital raising, social proof authority, and passive investing. My question to you, are you guys ready to raise? Shout out to our sponsors, Invest Next, Capitalist Pro, and our great friends at the Family Office Club. Get your copy of the insane video content produced at the Strategic Capital Raise Conference by going to strategiccapitalraise.com. With that, it's Capital Raiser Show episode 307, and it starts now. Rock and roll. I got Craig Stevens on the Capital Raiser Show. Welcome, my friend. How you doing, brother?
Doing very well. Thanks, Ruben. How are you?
Yeah, man. Honor to speak to you again. We spoke a little earlier this summer, had a pretty crazy summer, had COVID, had a couple of family members pass. So it's been a whirlwind for me. And then most recently, I left my company that I helped establish and built from a mom and pop syndication or private equity shop, better said, into what it is today. And now I'm like, what's next for me? So I can't wait to dive in and hear what your stories have been as you've scaled. You're a financial coach, an author, a TED Talk speaker. You were in financial services. So there's a lot of stuff that we're going to talk about. Forbes, Finance, Counsil. And recently in the last year, you quit your job. So welcome to the show, brother. I'm really excited, man.
Thanks for having me.
Yeah. Okay. Capital Raiser Show Season 4 brought to you and powered by the Family Office Club and our new sponsors at Invest Next. So with that, man, why don't you tell us a little bit about your background, Craig? How did you get involved in syndication? How about we start there?
I was a CFO at insurance companies. Previous to this, I'm a CPA and just kind of doing the corporate grind that everybody else does, and decided about 10 years ago that I wanted to lead a different path in my life besides just retiring in corporate America. So I started investing in real estate on the side while I was working my full-time job, just buying up properties myself. Grueling hobby to have, as you know, just sitting there trying to work and do the right things on your day job, but also finding the time to build up a portfolio of real estate investments. Finally got to the point where I built up a decent sized portfolio and realized that an economy as a scale perspective, syndications was just a far faster way to grow my portfolio and diversify smartly rather than just buying up my own properties and managing them. So I started investing in limited partnerships in syndications as a limited partner. Finally got to the point where I felt comfortable enough that I was moving on the right track that I quit my day job last year, focusing full-time on real estate at the moment. And I've turned to capital raising. So I've been here raising capital for different transactions and absolutely loving it.
Okay, cool. Tell us a little bit about the financial coach, the CPA stuff. You mentioned prior to the show, life insurance. So what kind of conversations did you used to have in the world of finance with clients that were looking to create wealth?
So in the past, as a CFO, I would be speaking at different conferences about really how to grow your insurance companies. What are the things you need to look for? What are the things to consider from a life insurance perspective or a property and casualty perspective? Those were not as exciting to me. So it wasn't on a real estate platform that I was speaking in those aspects. Leadership around, talking about how to lead a team. And then now I've started to help people understand better about investing in real estate. So I've helped guide people to invest in real estate themselves if they want to buy their own portfolio up and build a portfolio that way. And then also helping capital raisers as well with some advice and coaching.
Awesome.
How can they attack things differently from a capital raise perspective?
Love that. Okay, cool. And in the past, you've written a book or more than potentially one book. What did you write about? What were the books that you did?
Initially, when I first started my career, I was an auditor at Deloitte & Touche, and I wrote an article about mortgage securitizations. So pre-credit crisis, I was going around the country teaching companies how to properly account and report for their mortgage securitizations so they could qualify as being reported kind of separately as a derivative and off the books in certain cases. I don't like to admit that I spent a lot of time trying to help companies to make sure that they are getting their things structured the right way from an accounting perspective, so that which eventually some of these securitizations went really far awry and led to the credit crisis. However, the advice that I was giving, I still believe was sound and within the accounting guidance. I was published from that perspective on how to account for and report for mortgage securitizations And I've written other articles as well about wealth growth and how people should be thinking differently about their money.
So a lot of my friends in the capital raising coaching and in that space where they're teaching others how to scale and become more successful, a lot of times they're talking about like write a book, become an authority figure, run a meetup, or in some cases, go to conferences. You've mentioned some of those things. And I think for let's kind of turn it around and address the aspiring capital raiser or scaling capital raiser in terms of like building some of that tools. You were even a TED Talk speaker. Tell us about like, what would you recommend for the person that's trying to create exposure? Because that's one of the particular keys to the game right now is like, especially since things have slowed down during the current financial situation that's going across the country. Like instead of chasing capital, you attract it by becoming exposed to more and more people. Talk to us a little bit about what's the purpose of being an author or a TED Talk speaker or getting on stages. Do you implement some of that in your capital raising strategies today?
100%. I feel strongly that if you're in real estate investing or you want to get into real estate investing or you want to be successful in business in general, in any industry, you have to be known as an authority. You need to get yourself out there as soon as you can. And you might not have that much to talk about initially, but it's always important to let people know what you're doing, what you're excited about, what's driving you so that they can join you for that path. People get really excited about learning about different aspects of life, different aspects of business, different aspects of wealth. And even if you don't have a big story to tell at this moment, people like to follow you and understand a little bit more. You'll start to capture that audience to have people joining you throughout your success and moving forward. So finding different avenues of social media. So not just picking one social media site and just attacking that, right? As in LinkedIn, for instance, but finding ways to get quoted in magazines, newspapers, getting any type of TV time that you could or radio time, just always pushing to find these different avenues. And then it starts to snowball. You get this snowball of success where you're in one publication and then somebody finds out and then you're in another publication and it starts to build on itself. You're creating awareness around your brand and who you are, what you're doing. You're educating people along the way, which is extremely important in what we're doing as a capital raisers, right? Teaching people about the value and the wealth opportunities within real estate. And you're sharing yourself and being authentic about it as well throughout this process. And as you start to build up that credibility and awareness from your investors, right, as to what you're doing, it will start to draw new investors to coming, reaching out to you and getting excited about what you're doing and wanting to invest with you. So if you don't have a deal right now, I don't care. Still spend time getting out there, making sure that people are aware of who you are.
Yeah, and a lot of people talk about social proof. So when you're a Forbes Finance Council member, when you've done all of these put yourself in these authority positions where you're a speaker at a conference or a TED Talk speaker, we're curious about this because we see and respect people that have a Forbes logo somewhere on their website or they're part of a council, real estate council, finance council, investment council. Tell us, what is this process? Because I know it used to be free and now some people pay for it. What do you know about for anybody that wants to get that social proof of being associated with Forbes? How does that work? What can you tell us about that?
Yeah, let me give a couple of quick tips. I would say there is a intrigue about the brand name of Forbes and Fast Company. I've been on both of those different boards and councils, and they are paid subscriptions. You do have to apply for it. They don't accept everyone, but you have to meet certain criteria. You get interviewed, and if you get accepted, you do have to pay a fee. And it was about $2,500 when I joined Fastco. I think it's a little bit higher now, but it's a networking opportunity. So they provide you with the opportunity to write an article. You can write as many articles as you like in Fast Company and Forbes Council. These are two different related groups, but they also have awesome networking opportunities. So there's a lot of individuals in there that are maybe in your same industry that you get to meet along the way. They have some training meetings and virtual meetups and then also live meetups. So there's all these other kind of value add aspects. And then you can get quoted too. So there's like a lot of opportunities to just answer questions and get quoted in their articles that they publish. There are other avenues like that. So that's one way that it's a little sneaky. So people see, oh, you were in a Forbes magazine, you wrote a Forbes article. Well, it's a paid subscription, but you took the opportunity to go there, and you're also educating people. So you're creating some type of mystique around who
Hmm.
you are and what you're doing. Some people may call it imposter, being an imposter, and you could have imposter
I
syndrome by
haven't
doing
heard
some of
that.
these things, but it's creating
I don't think I've
intrigue.
heard that.
And as long as you're being authentic with these aspects, there are other ways to pitch yourself for TV stations. There's one called Biz TV, for instance. You can pay $500 and get on streaming TV. Have a section and you get interviewed on TV. That was something that I did. But besides that, also there's another one. Another quick tip is called Haro. I hate to give this away, but it's something that we use regularly. If you sign up for this, it's a free subscription. All these publishers daily will give different questions that they want answered. And if you give a quote back to them that they like, they'll put it in one of their articles. So you can get in different, I've been in Yahoo Finance and Go Banking and things like that. So it's just another way to make sure that you're responding to authors that are really looking for quotes and information from experts in the field, and you're there to provide it. So that's another way that I've been able to get published.
Fascinating. Let me ask you this before we talk about what you're currently investing in. You mentioned that you were a limited partner in some deals. So I did this MBA study where we had a group of MBA students that wanted to help us kind of analyze real estate markets. And we gave them a challenge. We're like, here's a $50,000 fake account. We want you to go to 10 of our syndication friends and competitors in the industry. And we want you to select somebody to invest your scenario $50,000 with. And we want you to tell us how you selected them. Like, what was the criteria? What did you like about them? And I'm curious because you had to go through this process yourself. It's an emotional process, having to give a portion of your money to somebody else to be a steward of that money. What were some of the criteria? I don't know if you can remember the emotional feelings and the sensations that you had when you first started investing as a limited partner. What made you decide who to invest with? That just out of curiosity.
And I've invested in things even outside of real estate as well, like venture capitals and things like that, private investments. I go through the same process. So being an accountant, I like the numbers. So of course I have to dig into the numbers first. I have to try to see the financial pro formas, see if they make sense. But for me, the most important criteria, and there's certain things to watch out for as well, right? Certain red flags. But for me, it was the experience of the team was just a really big part of that. So as a syndicator, as a capital raiser, you need to be able to display your experience as a team. It doesn't have to be just you, but the people that you're working with. How is this transaction going to work out the way that you expect? And that was a big part of my investment criteria, and it still is today for capital raising too. The other aspect is making sure that you know the location that you're investing in and that you believe that it's a strong market. There's some areas that could be great markets, but I just don't know enough about them. And if I'm not going to put in the time to research those markets, then I'm not going to be able to invest in those types of transactions. And probably the last thing would be if it looks too good to be true, then it probably is. That's an easy thing to think about, but it probably means that they're being a little bit too aggressive on certain returns and certain aspects of this asset, and scale back your expectations. I'm not necessarily shooting for the deal that says it's going to return 40% over a 5-year period. It's 40% a year or something like that. I actually turn away from those types of transactions. I'm looking for a more reasonable return that I think there's a smart mindset of the team to do the best that they can for the transaction and set the bar at a reasonable level and then hopefully overachieve.
Now, being that you're a CPA and you have some financial background, quite a bit of financial background, did you lean on anybody additionally outside of your own skill set to help you make a decision in your first few limited partner syndications?
I would say it's working with those syndicators, speaking with them to make sure that you're getting your questions answered and that you feel comfortable with the transaction. So making sure that you're digging into their aspects. I listened to a lot of podcasts and read a lot of books on how to analyze deals from a real estate perspective. And with my own real estate experience of buying my own properties, which was sometimes worked out great, sometimes didn't, I kind of learned what to look out for as well. But it was digging into the numbers and really making sense of those numbers and making sure that the story hung together.
Okay, so let's go into your business model. What have you been investing in now that you had in this particular moment in time, you had invested in some limited partnerships and you're thinking about scaling into syndication. How did you take that next step and what kind of asset classes were you looking for?
Now we're doing multifamily investments primarily. We're looking for certain markets that are secondary markets. So I'm not chasing after deals in New York City or LA or even most California markets, Dallas, Miami. Those are kind of off my list, right? I'm looking for kind of secondary markets that are a little bit newer, maybe not as well known, that we can go after, that have good growth potential, but also some good steady cash flow. So I'm going after deals that are typically 100+ units. They're probably 10 to $30 million acquisitions, and making sure that they're a value add opportunity. So what I'm looking for right now at this moment is value add opportunities for a building that maybe hasn't been marketed as well as it could be. It hasn't been maintained as well as it could be. The owner maybe just didn't give it all the love and care that needed. We can add some capital expenditures, improvements to the asset to be able to improve the exterior and interiors of these apartments and increase the rents, and then eventually kind of look to exit in 5 to 7 years. We've done multifamily properties, but we're also looking at, currently we're looking at a senior care living facility, and we've done storage facilities before as well. So I like that diversification of starting to learn about a new type of capital transaction that we can invest in that's maybe outside of the multifamily property to diversify our portfolios.
Okay. And before the show, you said that you're mostly focused on cash flow. So I'm curious about this because some people that have a great job, they're not quite as focused on cash flow, but I would see across the industry, a lot of people are very much of the mindset that cash flow is king. So let me ask you, because if you can make a 15% return on a cash flowing property versus a 25% return on a non-cash flowing property, you will probably take the cash flow producing situation. When you're having conversations with investors, how are you finding out the reason for their investing and what their pain points are, and getting them to understand how your syndications solve their problems?
The drive towards cash flow currently for me is in this market where we have higher interest rates, we have expenses going up on properties. We don't know where valuations are going. We hope they're always going up for real estate, but we can't be 100% sure of that. The cash flows help to stabilize the deal. So I'm looking for really a balance between moderate cash flows currently and an opportunity to improve those cash flows and improve the valuation, rather than just going into a property where maybe it has 2% cash flow returns or 3% cash flow returns, and we have an expectation that they'll grow over time. That to me puts the deal at risk if you're not able to grow those cash flows quickly enough to get to a good exit point. So it's really more about this current environment. When I'm speaking to investors, I'm helping to guide them. They're not necessarily needing that cash flow return, and I hope that they're not expecting that we're going to be getting this cash flow, because sometimes that's not going to come, right? There may be different circumstances that occur. They're typically looking for the overall returns of real estate and the excitement of getting those types of benefits. But teaching them that these cash flows can help to strengthen this property even on day one, if they have good cash flows, call it 5 to 7%, or we can get there quickly. That helps to keep the valuation stable unless something kind of significant changes in the expenses or the occupancy and rents. We're still going to be able to exit at a good value on that property compared to what we acquired it at.
Okay, cool. And then, so what are some of the markets that you have been investing in? You mentioned some secondary market philosophy, but didn't mention any specific places.
Yeah. So smaller locations that many people may not have even heard of, like Greenville, South Carolina. We got a transaction there. Absolutely love the market. It's tough to find deals there now, but we pulled into there. Mesa, Arizona, so outside of the outskirts of Phoenix. Warner, Georgia, another small kind of area that maybe is not as well known. Corpus Christi, Texas was my last investment that we raised capital for. Just kind of some of these markets that have good potential, some good infrastructure and some good investments, a lot of diverse industries in them that could attract additional attention of investors in the future to add value to these real estate beyond just the value that you're increasing by improving the property.
Craig, where do you live?
I live in North Carolina right now. So Raleigh, North Carolina. this is a great market as well. But again, it's already been found. If you
Mhm.
got here 15 years ago, you would have been in awesome shape. Still awesome growth potential, but it's difficult to find the right deal here.
Okay, so when you're doing these deals in Mesa and in some of the other places that you mentioned, are you the operator or are you partnering with other syndicators and then leaning on their team in place?
So I'm partnering with other syndicators at the moment. I decided from owning my own properties, I got to a little bit of exhaustion around managing properties over the last 10 years, having my own properties, and decided that actually my superpower would be bringing other investors to these opportunities and raising capital. So I'm a
Yeah.
capital raiser for other syndicators. In the future, if I look 10 years down the road, I'm sure I may do syndications myself and be the main operator. But at this point, I'm partnering with others that have that time and effort that they're going to put in and be the asset manager for the transaction.
Okay, cool. So it's not that you're syndicating right now and building your team, it's you're partnering with other people that have established teams. Great philosophy. I have run across some people that are just like, I want to be the main GP. And I've run across some other guys that are just like, I was the main GP. And that's a lot of work. I just want to focus on like launching funds and raising for others. There's different reasons why you may want to do one or the other. So I'm curious, what is the end goal for you? Like, let's look at 20 years down the road. Do you want to have the control or do you want to become completely passive and no longer be the one that's controlling? Tell me about some of your future goals.
It probably changes on a daily basis. So it depends when you speak with me. But I do think that there is some type of growth over the next 10 years where I grow a large fund, perhaps, and I become a syndicator and buying up assets within the fund and building my team. Could be a mix of capital raising still and doing my own syndications, expanding that way of just kind of bringing in massive amounts of capital from it could be family offices, could be institutions. And at some stage, though, I'd like to still exit and have a retirement. I'm sure I'll still be involved, but I would like to be involved as more of a passive investor, right? A limited partner at some stage. So maybe in the next 20 years, I'll be looking at deals, investing in those deals, still enjoying real estate and the benefits of it. I'll never get out of real estate, but kind of scaling back my life and being able to focus on other things.
Yeah. And some people, even myself, I'm active as a syndicator, and my end goal is at some point to not be active. I want to make my money and then become passive and then go do other things that I have interest in doing, like traveling and doing some type of philanthropy and things like that, where that becomes my work instead of is my work. So I'm curious about this because a lot of people eventually want to leave and become completely passive. What would you do with your life once you became passive in the future? Are there specific things that you want to accomplish outside of being a real estate investor?
I would to like to be, if I had the financial abilities, and at that stage I should, would be to maybe start some type of not for profit or maybe be some type of leader in those aspects, staying involved in deals and helping syndicators potentially on working on deals and placing deals. But just to the being able to scale back and give back to others, right? I think that would be my goal. Spend more time with my family, do some nice golfing and traveling, as you said, and just kind of find a different path, right? I don't want to retire and die. That's what can happen
Hmm.
is my grandfather, unfortunately, he retired at 64 and died at 66. Like worked
That's
his entire
common.
life. Yeah,
That's
it's
so
just
common.
so sad to see, right? I know that I'll never stop thinking and working and trying to do something differently. And I will need that to keep myself occupied and busy.
Prior to the show, you mentioned that you raised 7 million. And I think it was in the last 12 months or maybe in your first 12 months. What did you do that was successful and have you evolved since? Are you doing anything differently to scale that?
It's been growing in size. So my first deal, I was able to raise $1.4 million for, and my goal was a million. I'd never raised capital in my entire life, really. I cobbled it together with an Excel spreadsheet and making phone calls to friends and sending out email from my Google account. Then I started to kind of develop better processes and better systems to keep track of my investors more smartly using CRM tools, creating email campaigns that I can send out with those CRM tools. And the best part of my success came from my ability to analyze the deals and give investors that comfort that I have done my own review, but also sharing the experiences with people that I've known forever that have known that I've been investing in real estate. So it goes back to our first point of making sure that people know what you're doing today, immediately. Sharing whenever you have a chance. I would always talk to people that I worked with or my friends and family that I was investing in real estate. They couldn't join me at that time, but I built up 10 years of people interested in my story about real estate. So when it finally came time for them to join me on an investment, it was almost a no-brainer for some of my investors.
Okay, cool. Let's dive into the lightning round. My first question to you is, what is the best vacation you've ever taken?
I was living in Hong Kong. So I spent 2 years in Hong Kong while I was at my job as an auditor. And I took 2 months off before I was meant to return to the United States. And that was a great place to start. I traveled to Egypt for a month and just kind of backpacked by myself around Egypt, which was absolutely amazing. Wow. Then I backpacked around China and Nepal, and I got to go up to, I just did a lot of great things on that trip. And it gave me just this chance to unwind. I didn't have any work to think about because I was going to a new job in the US. Didn't have a BlackBerry, didn't have a cell phone to worry about. And I climbed to the base camp of Mount Everest. It was just an incredible journey spiritually and mentally and physically to be able to just get myself back and then refreshed and decide where I wanted to go with my future.
Yeah, it's good to take some time off and unwind occasionally. I feel like I'm in that position right now. Tell me, what's your favorite book of any kind?
I love reading and I'm constantly consuming new books. Currently, I'm reading The Success Paradox by Gary Cooper. So I'm currently in it, right? So I haven't finished it yet, but it's just a fantastic book. And I would say part of it is just about being authentic, being your authentic self, doing what drives you, and then making money off of that, as opposed to like finding out what makes money and going after just the money situation, because you can go after money all day, but it's not going to fulfill you eventually. And you're going to just be looking for the next thing to fulfill you, and then giving back as well. So if you're able to do something for your authentic self, not because somebody else wants you to do it, then you're going to be successful with that. The money will come when you're happy, right? So it's about building that.
Cool. How much of your success do you attribute to mindset?
Significant part of it. I'd say 90% is mindset, 80% is mindset. The rest is maybe hard effort and diligence. But mindset is just an extreme part of who I've become. I can tell when I'm not in the right mindset for a week's time, and the week goes by and I haven't accomplished what I wanted to accomplish, and I'm just in that wrong mindset. So getting yourself fresh and keeping in the right mindset is extremely important being successful.
How long do you want to live?
I'd say till 90 is a good number. I'd like to see my kids to have their own kids and have some grandchildren and going around being successful as long as I can and being happy as long as I can. So whatever that number leads to, I don't want to wither away somewhere. So let's have it be a nice kind of quick end.
Hilarious. Okay, short answer on this. Best way to raise capital from your perspective? Focus
on your core audience. So find investors that are in that core space, that you don't need to go after 1,000 people or 10,000 people. Go after 10 people, 20 people to start, and just keep pushing and finding those people that are going to believe in you and invest with you.
What would you need in order to 10x your business?
I still have to put in stronger operations and more team members to be able to build and expand. So I think we have some great trajectory now. It's building off of that and just growing our model to 10x the model, to 10x our ability to grow.
Can you tell me about a moment that changed the trajectory of your life?
I'd say the TED Talk. So you mentioned the TED Talk that I did, and it was the most frightening thing I've ever done, but the most rewarding thing I've ever done as well. Just getting up on the stage and being recorded and going through that conversation. But it keeps coming back. People keep kind of watching it. It's paid its dividends 10 times over, 100 times over. That was just absolutely a huge turning point for me to overcome that fear and be successful with that.
Do your spiritual philosophies have anything to do with your success in business?
They do, and I want to continue to build on that. So I'd say I've lost maybe my spiritual path over time, and I'm really trying hard to kind of get back onto that by just meditating and thinking more about where I want to be and giving myself that space and time to reflect on our successes and how lucky we are to be on this planet and to be there.
I can relate with that at a very high level. How about this? Have you ever experienced a miracle, or have you ever had a near-death experience?
I've had a near-death experience. I got hit by a car in Miami. It was a drunk driver hit and run. I was crossing the street and just came out of nowhere. I was chatting with my friends and I was the only one that got hit, and I got thrown about 10 feet. I came out of that really realizing how quick life can pass by, right? I had a slight concussion, I broke an arm, and my friends kind of dragged me to the side of the street. But I'd like to say that it changed me significantly, but it did give me this turning point where I started to just realize how quickly things can go, and the importance of focusing every day of your life on what makes you happy and what is going to improve your life and others' lives around you.
Awesome. Okay, last question brought to you by Shannon Amigo, one of our great listeners. She would like to know, what impact would you like to leave in the world?
I want to help others to grow their wealth. So back to my TED Talk, that's what I gave a TED Talk on, is how to help people to grow their wealth. It's about, even if I can help you to grow your wealth by $1, then I've started to be successful with every person that I have those conversations with. And that's really the impact that I want to leave with others, is have people become a little bit more well off compared to where they were before they speak with me, with me or learn from me. Yeah.
Really cool answers on the lightning round. Appreciate that. Thanks for entertaining us on that part of the show. Shout out to the Capital Raiser Nation. Thanks for tuning in. Please leave us a 5-star written review. Shout out to our sponsors, the Family Office Club and Invest Next. Craig, how does the audience get a hold of you, my friend?
Yeah, they can reach me at craig@groundbreakingre.com, or just connect with me on LinkedIn. Craig Stevens there. I'm pretty active on LinkedIn.
Okay. Any last words of wisdom for the aspiring capital raiser or syndicator as they scale on their journey?
Just keep at it. Keep pushing yourself and moving forward and learning from others. There are times when you get a little bit worn down and you think you're not going to be successful. And if you just stop, you're not going to be successful. So just keep on your trajectory and do the best that you can in order to grow your business and grow yourself.
That's good content, man. I really appreciate this. Thanks for coming on the show, man. Craig, enjoy the rest of your day.
Thanks for having me, Ruben.
Yeah.